Every single trader has experienced this when trading reversals. You've seen price push into a high. It looked clean. It looked like the move that you've been waiting for. So you took the short. Your stop was placed just above the high and it felt right. Structure was shifting. This looked like the reversal. Then price pushed up one more time. It ran your stop and only after you were out, it dropped. And now you're sitting there wondering, why does the exact setup work sometimes but fail other times? That final push is the manipulation leg. So today I'm going to show you exactly how they form, where they appear, and how to stop getting caught in them. First, we need to understand where manipulation legs are likely to form. They usually occur after price reaches a key liquidity objective. Some of these objectives may include your session highs and session lows, your previous day highs and previous day lows, your previous weekly highs and lows, and of course, higher time frame fair value gaps. Now, these are key areas where liquidity tends to build and where early traders often enter too soon. That is why we watch for how price behaves after the sweep of liquidity before looking for our reversal. So here we are on TradingView and we all understand basic reversal structure, right? We have a bullish structural market with higher highs and higher lows. We then all of a sudden see lower lows, lower highs and lower lows, right? That's successfully changing from a bullish program into a bearish program. Now, our manipulation leg is usually the final push before the reversal move on the lower time frame. In simple terms, it's this final sweep of liquidity before price pushes in the opposite direction. But how do we even know this is our manipulation leg? And more importantly, what is the characteristics to be able to identify it? So usually the first leg up is the sweep of liquidity. Let's just say, for example, this is your previous day high. So one of the key time frame objectives has now been swept, and early sellers will start to sell into their positions anticipating a true reversal, which in general is the correct model, but what we want to wait for is for that second internal sweep. So now we're waiting for the sellers who sold the previous day high to get stopped out, and then this validates your manipulation leg. This is the move that we want to get in to increase our win rate. And more importantly, some of the best displacement and distribution comes from the manipulation leg. As now we've shake out weak hands and we're really ready to move in the true intended direction. Now, what isn't a manipulation leg is as follows. So let's say, for example, price is just making higher highs and higher lows, and then the previous day high is here. Well, now we wouldn't have a manipulation leg because price has met the higher time frame objective and we've instantly reversed to the downside, making the lower lows and lower highs. Now, in general, we want to avoid that because now we have a very strong magnet above the key objective, and more often than not, price will come back, liquidate those early sellers, and you just don't want to be part of that move. Is there times when we may trade the first internal sweep? Yes, I would refrain from that if you really want to get your high win rate. So moving on to the first example, we're going to be using NQ. This is the asset that I predominantly trade, and there's examples of this every single day. So we're going to look to identify our session highs and session lows, and I want you to also follow along. Now here in the first example, we're going to pay attention to here. Price has swept out London highs. So that is your first higher time frame or key objective has been met. And what we want to see is this. We want to see that price sweeps the high, pulls back to create that internal liquidity, sweeps the internal, and then displaces in the other direction. That would be a successful manipulation leg. And instead of trying to short this position, which people would have done, they would have got stopped out, whilst we would have been patient and waited for the correct move. But how can we trade them? Because you're not just going to start shorting the second leg because price may make another manipulation leg and you want to see confirmation. So in this example, we're bearish. So we're going to look for bearish signatures into price. A good rule is you want to see where sellers are strong and buyers are weak. How can we identify that? Well, a really simple way would be to mark out a bullish fair value gap in this bearish example. If price starts to close beneath it, well, now we understand the context. We've had a manipulation leg, we've swept a key time frame objective, we're now breaking structure to the downside and showing that sellers are strong and buyers are weak. So there's a multitude of entry styles that you can use to capitalize on these. For example, one is your inversion fair value gap. You could take it on the displacement candle. Two is your CISD, where price closes beneath the last up close candle here, shifting this from a bullish order block to a bearish order block. Or three, you could just take the first presented fair value gap after the displacement, right? There's a variety of entry styles. You kind of just have to see what fits with your strategy and your own discretion and experience, and then you just target the opposing liquidity. So that would have been a really successful position. If we move to the left here, let's just go and check the Asia high. So in Asia high, what do we notice? Well, for one, Asia high is this blue box. Price is pushed up, swept out Asia high. Now here's a really good example of a non-manipulation leg still making a really good return. Here we have the internal high. What do we notice? Price has pushed up. It's swept out the key objective, but it hasn't taken out those early sellers, meaning they have successfully made a good trade, which will happen. And you have to really require or really practice a lot of discipline, because if we still entered with the first inversion here, we would have successfully hit the opposing liquidity, which is the Asia low. Now, what's fascinating though, if you were patient, let's drag this line all the way across here. What do we notice in these two session highs? Well, the same manipulation leg was confirmed. So here we had London, we have one pullback, the internal was taken. In that manipulation leg, what did we also do? We confirmed the manipulation leg for Asia high. So your best trades is now combined in two confluences, making this an extremely high probability trades that you could have taken. Now the opposite, we're looking at the London lows being swept now. London lows is the red box, the red line. What do we notice? Well, London was taken. Early buyers started to step in. I don't know why people do this, but they start buying into the positions represented by the up close candle. Now, what's happened next? We've had that up close candle, which is a pullback. We've taken out that leg, validating that we can now look for longs, and the manipulation leg is active. Now, what have we done in this example, though? We've also retaken the manipulation leg low, and a good rule that I like to follow is, let's say this is your London lows here. We take out London lows, we pull back, we form manipulation leg 1. I will give it maybe 1 or 2 chances. Your best trades will be when we have the internal being swept and we instantly reverse. Your lower quality positions would look like this. This is your manipulation leg low now. We take it, and then if it keeps taking it that 4th or 5th time, I'm now not going to enter a long position, as it's just a red flag. Why is price now not reversing? So I will give it perhaps 3 attempts, and if it doesn't show me that manipulation move to the upside, I will completely disregard that setup. So now we're looking at another example, again just using our session highs and session lows. And if you actually look at the time down the bottom here, the previous example was Tuesday. Now we're looking at Monday, and this happens over and over and over again. So again, we're on NQ on the 1 minute time frame. We have London highs here. They were taken inside New York. Now, what is interesting about this formation? Price has formed the first sweep of liquidity. Okay, we pushed up, meeting that higher time frame objective. We then pulled back and reswept the internal high. Okay, that sweep of liquidity, that down close candle is your pullback. Then we've pushed up, reswept that internal liquidity before really displacing to the downside. Now, there's a multitude of entry styles. I'm going to keep repeating this because it's true. I also use the CE of the Wick, and here is now the CE of the Wick combined with a manipulation leg. So you could even start your short positions here. Now, I do think that's a little bit more risky, but the risk to reward on these positions is substantial. What you really want to see is price displacing to the downside, breaking some support or resistance. In this example, we are bearish, so we're looking for key areas where buyers are weak and sellers are strong. That was really confirmed on this candle, but then even if you waited for some form of pullback to maybe your breaker block, maybe the 50% of the day, okay, there's a variety of things you could use to enter into this model. Now, there's two ways we can approach manipulation legs. One of them is waiting for that second sweep to trade the way down. And the other one, which is a thing that I'm going to do a more in-depth video on, is trading the manipulation leg. So we understand that a manipulation leg is likely to form once price has met the higher time frame objective. Let's use this in the inverse now. Price has swept London lows. Okay, this candle swept London lows. What do we notice? Well, there's no manipulation leg. So we understand there's a very high probability that price is going to come down, take the internal before any chances of going bullish. If we understand that, we can use that to our advantage. How can we use it? Well, we can look for support breaking again, confirming that sellers are strong, buyers are weak, and our chances of continuing down to form that leg is really good. Okay, so where is the first support breaking inside this move? Well, I can see we had a bullish fair value gap here. Price has broken beneath it on this down close candle. The stop loss could be at the swing high. Targets just a 1-to-1 to form that new manipulation leg, as you really be anticipating a reversal to the upside depending on the high time frame narrative. Now, my narrative on this given day was actually bearish, so if you want to have free access to this, then go ahead and join the link in the description. It's my Discord, it's completely for free, and you have my free daily analysis every single day. And if you found value in today's video, then go ahead and subscribe to this channel. It really helps support it and just helps me understand you want more content like this.